Welcome to EduTap's another insightful session of Perspective 360 degree, where we do current affair based answer writing practice in a detailed and structured manner. So, if you are an aspirant preparing for exams like RBI, NABARD, SEBI, etc., then this session is definitely going to help you with answer writing practice for the descriptive paper of Phase 2. So let us begin with the discussion, and the topic that we are going to discuss today is the fiscal policy. We are going to understand fiscal policy in a detailed manner, and along with that, we are also going to see the fiscal consolidation and fiscal deficit as a part of fiscal policy. So this lecture is going to be both analytical as well as answer writing practice based. So let us understand the context of this topic, why it was there in the news. So in the budget speech, the finance minister announced that the center would reduce its fiscal deficit to 5.1% of the GDP in 2024 to 2025. Then she further added that the fiscal deficit would be part to below 4.5% of GDP by 2025 to 2026. Now, if you are not in a position to understand these terms, and if you're not able to interpret anything out of these announcements, then it's perfectly fine, because that is what we are going to understand in this lecture. So once this budget speech was announced, after that there were multiple articles and editorials related to it in the newspapers with respect to the fiscal policy and the terms such as the fiscal consolidation and the fiscal deficit. So that is the reason why we have included this topic as a part of our today's session, so that we can understand it in a detailed manner and do some answer writing practice on it. So as far as the relevance of this topic to the syllabus is concerned, the RBI Grade B syllabus very specifically mentions the fiscal policy. Similarly, the NABARD Grade A syllabus also talks about the union budget, and under the union budget you have to prepare the fiscal policy also. Then the SEBI Grade A syllabus also specifically mentions the fiscal policy and the FRBM Act, which we are going to cover as a part of this session. I hope this is clear to you. Now, if you are a newcomer to our Perspective 360 degree series, then let me tell you that here, first of all, we are going to give you an expected question, and we are going to discuss this session on the basis of this expected question. Then once this session is done, you have to write the answer of this expected question in the comment box in your own words, and this answer will be evaluated by our team within 48 hours. And let me also add that this whole initiative is free of cost. So the expected question for today is, how can the detrimental effects of a high fiscal deficit on an economy be addressed? So the first keyword that we have to identify is the detrimental effects of high fiscal deficit, which means the negative effects of high fiscal deficit. And then the question says, what strategies can be employed through fiscal consolidation to achieve fiscal stability and sustainable economic growth? So it is asking about the fiscal consolidation policy in order to tackle the challenges related to fiscal deficit, so that we can achieve a sustainable economic growth and fiscal stability. So that is how you have to understand the keywords that are mentioned in the question, so that you are in a position to give answer as per the demand of the question. So let us see the blueprint of the answer that I would like you to follow while writing answers in the comment box as well as in your examination. So you have to divide your answer into the introduction, the body, and the conclusion. As a part of introduction, you have to make sure that your introduction should not cross 10 to 12% of the total word limit. The same rule applies to the conclusion also, and the rest of the word limit should be dedicated to the body part, where you have to break down the body into different headings and subheadings. Under the subheadings, you will write different points, and you have to make sure that you substantiate your points with the help of relevant data, facts, or examples. This is done in order to avoid the generalization of your answer. So when it comes to perspective 360-degree, we not only emphasize on gaining the content or the knowledge, but also we equally give importance to the answer writing practice. Because when you are writing your answer in the exam, then primarily you face two challenges. The challenge with respect to tackling the word limit, and the second challenge is regarding the time limit. And the only way to deal with these challenges in an effective and practical manner is through the practice and the regular practice. So, if you are watching this lecture just for the sake of gaining knowledge, then I would encourage you to do answer writing practice also, so that you are able to improve with time. So, this is the whole intent behind our approach, that you have to give equal importance to the knowledge as well as the answer writing practice part. So let us break it down, and we have already seen how can we design, like we have to break the answer into introduction, the body part 1, the body part 2, and the conclusion, and step by step we are going to see how we are going to write these subsequent parts. But before we jump directly to the introduction, first of all let us understand the fiscal policy, and I'm going to start it from a very basic level so that even the aspirants who do not belong to economics background can understand it very clearly. So first of all, let us see the meaning of the term fiscal. So the term fiscal means that is related to the expenditure and receipts of the government. Now, before understanding the fiscal policy of a nation, let us follow a very basic approach so that you are able to relate it in a better manner. So, let us imagine that this is a house and it has different family members. And the combined income of the earning members of this family is, let's say, rupees 50,000 per month. And their expenditure is rupees, let's say, 45,000 per month. So what is going to be the savings? The savings will be rupees 5,000 per month. Now this is nothing but the budget of a family. Now tomorrow if this family wants to buy a car, let's say worth rupees 5 lakhs, then it would be difficult for them to buy it from these savings because they are very low comparatively. So what they are going to do, they are going to take the loan or the borrowings from the banks in order to meet their expenditure to buy this car or the other commodities. So what I mean to say is that this is nothing but the family is managing their budget through the management of their income and savings in order to meet their expenditure. So this management is nothing but the fiscal policy of a household, which is the family is managing their expenditure and receipt. So when it comes to the nation, then every nation has a certain budget. Just like this family, and this budget can be divided into the expenditure and receipt. Now let me change the color of the ink. Now just like this family, the nation also has a certain budget that can be divided into the expenditure and the receipt. So expenditure means the outflow of money, the money that we are expending in order to meet certain objectives, and the receipts means the revenue or the incoming flow of the money. So for the family, this income was your receipt, which means the source of revenue, and the different sources were, it could be the salaries or the remittances, etc. And in case of the nation also, the sources of receipts can be such as the tax and the non-tax revenue. Non-tax revenue can be such as the grants to the government, or it can be the fees or the fine collection, etc. We are going to understand it in a detailed manner, but just for the brief overview, understand that these are the different sources of the receipts. Similarly, the government also has certain budget regarding the expenditure, and the government tries to keep a balance between these expenditure and receipts through the tools of fiscal policy, which are the spending and the taxation. So what the government is doing, government is using these tools of fiscal policy in order to manage their budget by managing their expenditure and receipt in order to drive the economy in a certain direction. So this is nothing but the fiscal policy of the government. And when this expenditure of the government is more than the receipt, which means, let's say the expenditure is rupees 20 lakh crore, which means the government wants to invest or wants to spend 20 lakh crores in the economy for different schemes or policies or plans. But the receipts are, let's say, rupees 15 lakh crores. So what is the difference? The difference is 5 lakh crores. It means by the margin of 5 lakh crores, the expenditure exceeds the revenue or the receipts. This 5 lakh crore is nothing but the fiscal deficit of the government. I hope this is clear to you. So fiscal deficit is nothing but it is the shortfall in the revenue of the government. The fiscal deficit means how much the total expenditure exceeds the total revenue of the government. So this is about the brief overview about the fiscal policy, and we are going to understand how these tools work and how the government manages the fiscal policy in order to manage its economy. So I hope this is clear to you. Now let us see the definition, and we have already discussed that fiscal policy is the use of government spending and taxation, which are the tools of fiscal policy, to influence the economy, and the government uses fiscal policy to steer the economy in desired direction. I hope this is clear. Now let's move on to the types of fiscal policy and how these tools are used by the government in order to achieve the certain objectives through these types. So the first type is the expansionary fiscal policy, and the second type is the contractionary fiscal policy. Now, as the name suggests, the aim of the expansionary fiscal policy is to expand something. So the aim of the or the goal of the expansionary fiscal policy is to increase the aggregate demand in the economy. In opposite to that, the contractionary policy's goal is to decrease the aggregate demand in economy. Now what does it mean? Let me again open the white screen. Now let us understand how the government uses its tools in expansionary fiscal policy and contractionary fiscal policy in order to meet different objectives. So imagine a scenario where the country is facing the slowdown, the consumer spending has reduced, the businessmen are facing losses, and the unemployment rate is high. Now what government can do is, through expansionary fiscal policy, the government can come to action through the tools of spending and taxation, which are the tools of the fiscal policy. Now how the government is going to use this tool? What government can do is, government can increase the spending in order to buy services from the market. So the government will increase the spending to buy services from the market. What type of services can the government buy through this spending? They can build roads, they can establish factories, or they can buy machineries and etc. And what the buying of these services in the market will lead to? It will lead to increase in the jobs, because when the government will build roads, then the different people will be involved in this project, so there can be different type of services that the government can, to which the government can increase its spending. So what will it lead to? It will lead to increase in jobs, the increase in wages, and that will lead to increase in demand in the economy, or the increase in the aggregate demand in the economy, and can help the government or enable the government to tackle with these challenges. Because when the demand or the money in the hands of the consumers is increased, then the consumer spending will be increased, the businessmen will start becoming, will start coming to a better position, or I would say will start becoming profitable, because the more money will be spent in the market, and when the people will have, or the consumers will have more money in the market, they are going to buy the commodities from this businessman, and that is going to help them in profit making, and it will also help to increase the jobs, that is to reduce the rate of unemployment. So that's how the government can use its tool of spending through expansionary fiscal policy. Now the second tool is the taxation. Now what taxation can do is, government can reduce the tax in the economy, and by reducing the tax, it will leave consumers with more disposable income. So the when the consumers will have more disposable income, that is more money to spend, then that will also increase the demand in the economy. So I hope you're getting my point, how the expansionary fiscal policy plays role in order to deal with the challenges, and how the government uses its tools in expansionary fiscal policy in order to meet its objectives. The opposite of this happens in the contractionary fiscal policy. Now, let us imagine a scenario where the inflation is very high in an economy. So, inflation is nothing. If you do not know what is inflation, it means the increase in the prices of goods and other commodities. Why does it happen? It happens due to different factors. I'm not going to cover it in this video, otherwise we will get distracted from the main theme of the topic, and also the video will become very lengthy. But just you can read it from the textbooks, that you can read about the cost push and the demand pull inflation. So there are different reasons behind the inflation, but the main idea is that why the prices of goods and commodities increase in the market, because of increase in the money in the hands of consumers. So when the consumers have too much money in the market, what they are going to do, they are going to buy a lot of commodities from the market, and this will lead to more competition to buy those commodities, and will increase the prices of those commodities, and this increase in price is nothing but the inflation. So this is what we mean by the increase in inflation. Now let us understand how the government will use the tools of fiscal policy in order to deal with this challenge of inflation. So what the government can do is, it will again use its tools of spending and taxation, but this time, unlike the earlier case, the government is going to reduce its spending. What will happen when the government will reduce its spending? It will reduce the money supply from the side of the government in the market, and that will help us to control the inflation. The second tool is the taxation. So what can happen through taxation? Government can increase the taxes, and when the government will increase the taxes, it will leave the consumer with less disposable income, because a certain part of their incomes would be suck out from the economy through the taxation, so their disposable income would get reduced. And what will happen due to that? it will lead to decrease in the money in the market, that will later on lead to the control of inflation. So that's how the government can use the contractionary fiscal policy and the expansionary fiscal policies to through its use of the tools of spending and taxation. Now let me change the ink. One another technical term that you could see in the exams or in your questions is the pump priming. This is a very easy term, but just for the sake of covering it, the pump priming is also called fiscal stimulus. Now, what do we mean by pump priming? When the government increases its spending in the economy in order to buy the services, what it is doing, it is injecting, or I would say pumping a lot of money in the market. And this pumping of money or this injecting of money through the increase of expenditure or the decrease of taxation is nothing but pump priming. I hope this term is clear to you. Now let us move back to the slide, and now you will be able to understand it in a very easier manner. So expansionary fiscal policy means the government increases spending. Let me change the ink. Yes. So the government increases spending and reduces tax levels to increase aggregate demand in the economy. We have seen how the government does that through the help of its tools. Similarly, the contractionary policy means the government reduces spending and increases tax level to decrease aggregate demand in the economy. So that's what the contractionary and the expansionary policy means. And now I hope you have a good idea about what fiscal policy is and what is the significance of fiscal policy through the government. And this is the pump priming or the fiscal stimulus, and I've already explained that, and this leads to the decrease in money circulation. And now we know how it happens. So I hope the whole idea is clear to you. Now let us see the objectives of the fiscal policy. What could be the different objectives of the government that it can fulfill through the tools of fiscal policy? The first objective is the economic growth. Now, how does the economic growth happens as a result of fiscal policy? We have already seen that if the government will increase the spending and buy services from the market, such as building roads or improving healthcare facilities or making more schools, building more schools, or investing in the skill development of the people, that is in the human capital. What all these actions will lead to? It will naturally increase the economic growth of the nation. The second is maintaining high level of employment. So how the government can manage employment, we have already seen that through when the government will invest in these assets, it will lead to increase in the jobs and the wages. The third is the inflation management. We have seen it in a very detailed manner that inflation is nothing but the increase in the prices of the goods, and it is due to because of the huge supply or the injection of money in the market or or in the hands of the consumers. So what government does, government will suck out some money from the market by reducing the spending or increasing the tax, and that will lead to the inflation management. So I hope this is clear. Next point is regarding equitable distribution of wealth. How the government can ensure the equitable distribution of wealth through fiscal policy. Let me give you an example. The example can be of progressive taxation. Now, what is progressive taxation? Suppose this is an economy, and in the economy there are the different stratas of people in the society. So there can be the rich people, there can be the middle class people, and there can be the poor people. So as per the progressive taxation, the rich people will pay higher tax as compared to the middle class people, and the middle class people will pay higher tax as compared to the poor people. So if your income is increasing, then the percentage or the rate of tax that you are going to give to the government is also increasing. So this is nothing but the progressive taxation. So this ensures that there is equitable distribution of wealth in the economy. I hope this is clear. The next is the welfare. How the government can promote welfare through fiscal policy, through the availability of different schemes or subsidies, such as MG Narega for the employment, National Health Mission for improving the healthcare services, Sarva Shiksha Abhiyan for the education. It can be n number of schemes. So that's how the government is promoting the welfareism through the approach of fiscal policy. I hope this is clear to you. Now let us understand in a detailed manner what do we mean by fiscal deficit and fiscal consolidation. We have already seen the overview of fiscal deficit, like what fiscal deficit is, the shortfall in the revenue of the government, or how much the expenditure exceeds the total receipts of the government. So that is what we mean by fiscal deficit, and we have already seen that. Now we are going to understand a bit in detail about the fiscal deficit. So first of all, let us read the definition. When a government's total expenditure exceeds its total revenue, excluding the money from borrowings. Now, what do we mean by excluding the money from borrowings? So we are going to understand it in a detailed manner, but let me open the white screen. Yes, so fiscal deficit is the difference between total expenditure and total receipts, and total expenditure includes the revenue expenditure and the capital expenditure, and the total receipt will include the revenue receipts and the capital receipts. And the capital receipt will include, we are going to mainly focus on the capital receipts because this is what we have to understand in a detailed manner. So the capital receipt will include debt creating capital receipts and the non-debt creating capital receipts. Fine. So debt creating capital receipts means nothing but which are a part of borrowings. So we are going to understand it. This is just an overview. So in order to understand these terms, first of all, we need to understand the budget of the government. So the budget of the government has two components. The first component is the revenue budget, and the second component is the capital budget. Now, why do we divide the budget into revenue and capital budget? Because of the provision mentioned in the Article 112 of the Constitution that mandates us to present the revenue expenditure separately from the other type of expenditure. So the other type of that expenditure is a part of capital budget. So that is why we present our budget in this manner. So let me change the ink. Now this revenue budget can be divided into the revenue receipts. The revenue budget is divided into the revenue expenditure and the revenue receipts. Similarly, the capital budget is divided into the capital expenditure and the capital receipts. Now let us understand what these terms mean. So when we talk about the revenue budget, it is that part of the budget that does not lead to creation of assets and liabilities, whereas the capital budget is that part of the budget that leads to the creation of assets and liabilities. Now what do we mean by that? When we talk about the revenue budget, it consists of both expenditure and the receipt, and whatever expenditure we are doing from the revenue budget, usually we do it to meet the day-to-day expenditure or day-to-day receipts of the government. So this expenditure or the receipt in under the revenue budget does not lead to creation of any asset or the liabilities for the government. In contrast to that, in case of capital budget, if we talk about the capital expenditure and capital receipt, then the expenditure and the receipt through under this budget, they lead to the creation of asset and liabilities. What type of creation of asset and liabilities we are going to see with the help of example. So when we talk about the revenue expenditure, so revenue means does not lead to creation of asset and liabilities, and expenditure means the spending of the government, the outflow of the money. So what could be such examples? Let me change the ink, and the examples can be such as the grants given by the government. So the, let's say the grants given by the central government to the state government. Now you would say that when the grants are given to a state government, then the state government can buy some assets in the form of machinery, etc. from it. But that is not we are talking about. We are talking about the direct creation of assets and liabilities. We are not talking about the indirect creation. So if the government is giving grant, if the central government is giving grant to the state government, that is not directly leading to the creation of assets and liabilities. So it is a part of revenue expenditure. Another example could be the subsidies. When the government such as gives the subsidy to the farmers, then it does not directly lead to creation of asset and liabilities. Another example could be the payment on salaries. So it also has the same explanation that no asset or liability creation takes place in this scenario too. Now let's talk about the revenue receipts. So what do we mean by revenue receipt? If we break it down, then the revenue means that does not lead to creation of asset and liabilities, and the receipt means the inflow or the revenue of the government. So what could be the examples of that? So that can include such as the tax revenue of the government, because when we pay the tax, let's say in the form of GST to the government, it directly does not lead to creation of asset or liabilities. It just goes with the government, and later on the government uses it for the different purpose, but there is no such direct creation of liabilities though. So tax revenue could be an example of that. Another example could be the fees, such as the property registration fees of the government. So when we pay the property fees, it goes to the government and is another example of that. The third example can be profit of public sector enterprises. So the profit that is earned by the companies of the government, such as the ONGC, etc. These profits are also the form of revenue receipt. So I hope this is clear to you. What do we mean by the revenue expenditure and the revenue receipts of the government? Now the next part is regarding the capital budget, and I have already said the capital budget means the budget that leads to creation of asset and liabilities of the government. When we talk about the capital expenditure, so capital we already know what does it mean. That is the creation of asset and liabilities, and the expenditure means the outflow or the spending of the money by the government. So what could be example of that? One example can be the acquisition of machinery or the building of roads, etc. Another example can be the buying of defense equipments. So suppose if the government is buying the Rafale from France, what it is? It is a direct asset of the government, which is in contrast to the revenue expenditure where there was no direct asset creation. So in case of capital expenditure, there is direct creation of asset, and these assets are usually used for the long term. So that is the main idea about the capital expenditure. The next is the capital receipt. Let's talk about the capital receipts. So if we break down this term again, so capital means the creation of asset and liabilities again. So what do the receipt mean? The inflow of money. And what could be the example of such receipts that leads to creation of liabilities for the government, such as the disinvestment? Another example can be the borrowings or the loans of the government. Loans of, let me write it, the loans of the government. So why the loans or the borrowings of the government are part of capital receipts? Because these are the liabilities of the government. So loan is the liability of the government, because when we take the loan, in return we have to pay the interest also. So that's why it is a part of capital receipt. I hope now you get the idea about what are the different components of the budget. And now let us go back to the understanding of fiscal deficit, because now we are in a position to understand it. So when we talk about the capital receipts, so the capital receipts, as we have already said, are debt creating capital receipts. What are the debt creating capital receipts? Such as the borrowings or the loans of the government. And what are the non debt creating capital receipts? These can be such as the disinvestment of the government. Now the idea behind fiscal policy is that when we talk about the idea behind the fiscal deficit is that when we talk about the fiscal deficit, we do not consider borrowings or the debt creating capital receipts as a part of fiscal deficit. Now why is it so? Let's talk in numbers so that it becomes easier for you to understand it in a easier manner. So if we write down the formula of fiscal deficit, so it is the total expenditure minus the total receipt. Understand it very carefully. So the total expenditure is the revenue expenditure plus the capital expenditure minus the total receipt will be the revenue receipt plus the capital receipt. Now if we break down this formula further, then the total expenditure is revenue expenditure plus capital expenditure minus the total receipt is the revenue receipt plus what does the capital receipt include? The debt creating capital receipts and the non-debt creating capital receipt. Now let us use the numbers in order to simplify it further. First of all, let me erase it. So let me write again that the fiscal deficit is the total expenditure minus the total receipt. So the total expenditure is the capital expenditure plus the revenue expenditure, and the total receipt is the revenue receipts plus the capital receipts. Now if we break it down further, revenue receipt plus, so when we will further on break down the capital receipt, we will write it as non-debt creating capital receipt plus debt creating capital receipts. So as a part of calculating the fiscal deficit, we are going to exclude the debt creating capital receipt from the side of calculation. Why? Because for now, at this point of time, the government has not taken any loan in order to fix the gap between the expenditure and the receipt. So if we calculate the fiscal deficit for now by using the previous example, so a fiscal deficit is going to be rupees 20 lakh crore minus 15 lakh crore, which is the total expenditure and the total receipt, and this 15 lakh crore is excluding the debt creating receipt. The debt creating receipt, as we had discussed in the previous slide, which are the borrowings or the loans of the government, and the non-debt creating receipts are the receipts that it earned through the disinvestment. So when we talk about the fiscal deficit, it is going to be 15 lakh crore. Sorry, it is going to be rupees 5 lakh crore. So this is the fiscal deficit of the government. Now imagine a scenario if the government takes the loan from the bank or the borrowing from the bank in order to fix this fiscal deficit. Now this calculation is going to be written in the debt creating receipt category. So what will happen when we will add that calculation? So this is the case 1 and this is the case 2. So how it will change our calculation? So fiscal deficit will be 20 lakh minus 15 lakh plus 5 lakh, which means the 5 lakh is what? The borrowings of the government, which is the debt creating capital receipts. So what the fiscal deficit is going to be? It is going to be 20 lakh minus 15 plus 5 is 20 lakh crore, and it is going to be 0. So that is the reason why we exclude the borrowings from the calculation of fiscal deficit, because if we will include that also in the fiscal deficit, that is the loans that we are going to take in order to meet the shortfall in the revenue of the government, what will it do? We won't be able to calculate the precise fiscal deficit for the economy. So the fiscal deficit will come to be 0. So in order to avoid this situation, what we do, we deduct the debt creating capital receipts from the calculation, so that we are in a position to calculate the effective fiscal deficit. So that is the reason why when we say when a government's total expenditure exceeds its total revenue excluding the money from borrowings, so these money from borrowings is nothing but the debt creating capital receipts, which is the loans or the borrowings of the government from the market. I hope this point is clear to you. So now let us move on to the fiscal consolidation. So fiscal consolidation is nothing but it is the effort or the reforms by the government to bring down the fiscal deficit. So this is easy that the reforms of the government takes, it can be different type of reforms related to the spending or the taxation. So these are reforms comes under the fiscal consolidation. So the aim of the fiscal consolidation is to improve the long-term sustainability of public finances and restore confidence in the economy. So now we are in a position to write our introduction. And since the question asks about the detrimental effects of the fiscal deficit and how the fiscal consolidation can play a role in order to tackle those challenges and ensure the economic sustainability. So how we can start our introduction is, instead of directly starting from the definition, because the question is not asking about the definition. So instead of using the definition in the initial part of the introduction, what you can do is you can write a data or any current affair reference. So I have mentioned the reference of the budget speech of the government. So in our budget speech, the finance minister set target to reduce the fiscal deficit, aiming to bring it down to 5.1% of the GDP in the fiscal year 2024 to 2025, and further below to 4.5% by 2025 to 2026. We already saw it in the news. So this is the initial part of an introduction. Then we can write, while fiscal deficit is necessary to meet the government expenditure targets, fiscal consolidation is paramount for ensuring long-term stability and sustainable economic growth. So what we are doing, since the question was asking about the detrimental effects of fiscal deficit and the fiscal consolidation policy, to tackle them, what we are doing, we are writing the comparative analysis in one sentence related to the fiscal consolidation and the fiscal deficit. So we are saying that though the fiscal deficit is important in order to meet the government expenditure targets, but the fiscal consolidation is also equally important for ensuring the long term stability and sustainable economic growth. So that is the second part of an introduction. Then after that, what you can do is you can write the mention of the you can mention the definition of the fiscal deficit and the fiscal consolidation, so that the examiner knows that you have a proper understanding of it. But don't stretch it too much, write it just within 1 to 2 lines, so that you do not cross the word limit, and also you can save the time. So be relevant as much as you can as per the demand of the question. Now, after understanding the introduction, let us also understand the FRBM Act, which is an important act or legislation with respect to the fiscal deficit, so or the fiscal policy of the government. So the FRBM is nothing but the Fiscal Responsibility and the Budget Management Act that was passed in 2003 and became effective from 2004. So why did the government decided to legislate this FRBM Act? Because the government wanted to ensure the fiscal discipline in the economy. So in the early 2000s, our country was facing through gross fiscal deficit of 6.1%. So what the government thought, they thought that they should create a committee, an expert committee. On the basis of the recommendation of this expert committee, we will create a law, which is the FRBM Act, and this will help us and the future government also in order to limit the fiscal deficit under a certain range. So it will help to ensure the fiscal discipline in the economy. So that was the main objective behind the introduction of FRBM Act, and the committee recommended different recommendations that were chaired by EAS Sharma, who was a bureaucrat, and this reason we have already discussed. And these were the different objectives of the FRBM Act. So to institutionalize fiscal discipline or the fiscal prudence in the country, so to reduce India's fiscal deficit and long-term macroeconomic stability. I hope the objective is clear to you. Now let us see the different provisions or the important features of the FRBM Act 2003. So the first feature was to reduce fiscal deficit to 3% of GDP by 2008 to 2009. So at that time, this year was mentioned, and later on, the amendments were made to this act, and the targets were changed to 5.1% of GDP for the respective year, and the 4.5% of GDP by 2025 to 2026. So these targets keep on changing with amendments as per the different circumstances and objectives of the economy. And it also recommended to uh, it also set the target for the center to reduce fiscal deficit by 0.3% of GDP every year. So that was also an important recommendation. Then the second recommendation was to reduce the revenue deficit by 0.5% of GDP per year and complete elimination by 2008 to 2009. So revenue deficit is nothing but it is the difference between the revenue expenditure and the revenue receipt. And when this difference is positive, so it means the country has a revenue deficit. So the FRBM Act aimed to regulate revenue deficit also. The third point is central government debt does not exceed 40% of GDP by 2024 to 2025. So that was also an important provision that talked about the debt of the central government that should not exceed the 40% of GDP. Then the provision also had the escape clause in it. So escape clause is the clause that allows the government to skip from the target of fiscal deficit for a particular year in case of situations like the act of war, the national calamities, the collapse of agriculture sector, or the far-reaching structural reforms with unanticipated fiscal implications. So the example of this can be the COVID. During the COVID times, the government made a small some sort of deviation from the fiscal deficit target, so that it did under the escape clause. Now another point regarding escape clause is that the deviations from the stipulated targets shall not be more than 0.5%. So that deviation that they are making under the escape clause, that should not be more than 0.5%. So I hope the FRBM Act is clear to you, and very specifically it has been mentioned in your SEBI Grade A syllabus and is important for your exam. Now let us see the body part of the question. We have done the understanding part, the analytical part, and we have understood the different aspects related to it. Now let us see the body part 1. What are the detrimental effects of high fiscal deficit? So the first detrimental effect is the interest payments. So as we have seen that what happens in case of high fiscal deficit is that the government borrows more in order to meet the deficit in the fiscal, that is the deficit between the expenditure and receipt. And when the government borrows more, then it will increase the interest payment of the government, so which is one of the negative implication of the fiscal deficit. And this is we have already discussed, yet you can read it. So for the sake of value addition, I have this data from economic survey of 2022 to 2023, which says that after pandemic outbreak, interest payment as a proportion of receipt increased due to higher government borrowings. So government wanted to meet its fiscal deficit, and in order to meet the objectives of the economy, they borrowed the money and their interest payments increased. So that is the main idea. The second point is the crowding out. Now I will have to explain you the difference between crowding in and the crowding out. So let us see it in a brief manner. So the first thing is crowding out, and the second thing is crowding in. So when we talk about the crowding out, imagine a scenario of a booming economy where the resources or the economic resources are being fully utilized in the market. Now imagine a scenario if the government issues the bond in the market in order to finance its deficit. The point is that what the government is doing, the government is issuing the bond in the market so that it can borrow the money from the market in order to meet its fiscal deficit. Fine. So the government is issuing the government bonds in order to meet its fiscal deficit. Now, what will be the impact of it as far as the private sector is concerned? As you would be knowing that the government bonds are less riskier, that is, they are more safe. So what a lot of people do is they prefer the safe bonds or the less risky bonds. So what they will do, instead of investing in the private bonds, the people will start investing in the government bonds. So what it will do, it will lessen the avenues for the private sector. So what the crowding out will do, crowding out means when the private sector gets displaced because of the actions of the government. The second is the crowding in. So imagine a scenario of a economy that is facing the slowdown or recession, and the economic resources of this economy are underutilized. Now what will happen as a result of it is that, let us say the government increases its spending in the economy in order to increase or inject the money in the market. So what it will do, it will help to boost the economy, and when the consumer spending will increase, to whom it will benefit the most, it is going to benefit the private sector. So what it will lead to, it will lead to crowding in of the private sector. So crowding in means the private sector gets pulled in. So now coming back to the slide, so the detrimental effect of fiscal deficit on economy is that since the government is increasing its borrowing from the market, what it is leading to, it is leading to the crowding out of the private sector. So the higher government, though, so the high government borrowing to finance fiscal deficit can crowd out private investments by absorbing available fund in the finance markets. This can lead to a higher interest rate, making borrowing more expensive for businesses and individuals, and thereby reducing private sector investments and the economic growth. So this is the conceptual part of it. So the third point is inflationary pressure. So we have already seen how the fiscal policy plays role in order to manage the inflation in the economy. So one of the outcomes of fiscal deficit or the negative effect of the fiscal deficit is the inflationary pressure. We have already analyzed that. There is no need of explanation. So the fourth point is the long-term growth implications. So if we have high fiscal deficit for a very long time, what it will lead to? It will lead to the debt trap for the government. So that will have the long term growth implications on the government. So what it will lead to, it will lead to weaken the economy and reduce the productive capacity of the human capital. So that is what we mean by the long-term growth implications. So these were the impacts of the fiscal deficit on economy, and we are done with the first body part of our answer. So you can see, if we see this answer, what I am doing is that wherever possible, I'm trying to add examples or the data in order to justify my points. You can also search on the internet and read the textbooks in order to make these points more better by adding some data or the relevant examples related to it in your answers in the comment box. So the next thing is that I would like to add is just a small part, that is the fiscal deficit always disadvantageous? So the answer is no. So whether the fiscal deficit would be advantageous or disadvantageous for an economy, it depends on its use. Imagine if the government is using fiscal deficit or the borrowings from the economy in order to create the capital assets such as setting up of industries, opening of schools, opening the hospitals, then initiating schemes related to, let's say, to improve the employment or the skill enhancement of the human capital. What all these things will lead to, this all these things is not the deficit but the investment in the economy, because all these things in a long term is going to give us the returns, and that will enable the economy to grow at a higher rate. So if the government creates new capital assets, then that will increase its productive capacity and generate future revenue streams. So this shows that the fiscal deficit is not always harmful. It should be used in a judicious manner in order to meet the demands of the economy. So if the fiscal deficit is being used in an optimized manner, so what it will lead to? It will lead to the benefits or the economic sustainability in a long term. So I hope this point is clear to you. Here I have mentioned the trends of the India's fiscal deficit. So you can see that during the COVID times, the fiscal deficit was 9.5, which is very higher as compared to the previous fiscal deficit targets. So this is, you can see, and I hope now let's move on to the body part 2, which is the role of fiscal consolidation in order to tackle the challenges. So the first thing that we need to write is, so the first thing is the budgetary priority. So the government should prioritize budget about where it's going to put it expenditure so that it can help the economy in a long run. So government should identify key budgetary priorities such as the essential public services, infrastructure investments, social welfare programs, then the defense spending, and etc. So these things should be considered in mind as a part of fiscal consolidation to tackle such challenges of fiscal deficit. So different schemes can be such as, you can write it in your answers for the value addition, and the Pradhan Mantri Gram Sadak Yojana, MG Narega, National Health Mission, Sarva Shiksha Abhiyan, and the next thing is enhancing the tax to GDP ratio. So tax to GDP ratio is nothing but the proportion of tax as a part of GDP. So if this is high, it means the tax revenue is high as a part of GDP, and when the tax is high, it will lead to more revenue streams and economic growth. So what the government should do, they should focus on the reforms of fiscal consolidation by considering the enhancement of tax to GDP ratio. And I have written this data. You can mention it in your answers that the tax to GDP ratio this year was 11.6% for the year 2023 to 2024, and next year the target is 11.7%. So, and the last year it was 11.2%. So you can see how the government is aiming to increase the tax to GDP ratio with time so that it can aim towards the fiscal consolidation. Now, the next point is social implications. So, of course, the fiscal deficit, if the economy is under a huge fiscal deficit, then it is going to impact it is going to have the social implications also, such as increasing the inequality, increasing the poverty in the country. So, the government should take into account the social implications also and perform steps related to the fiscal consolidation, such as the equitable income distribution, then reducing the poverty levels, the schemes such as the MG Narega and Pradhan Mantri Andhan Yojana, and all such schemes. You can write it in your examples. So what it will help? It will help for the to tackle the challenges related to the social implications in the economy. The next point is the external factors. So external factors, for example, during the Russia-Ukraine war, what was happening? The European countries were pressurizing the Indian government to not buy oil from Russia. But the Indian government countered by arguing that they have to buy the oil from Russia manage their fiscal in order to manage their fiscal expenditure, and also in order to provide cheaper oil or the cheaper energy services to their people. So that's how the external factors also affect the fiscal deficit. So government should also consider the external factors in order to move towards the direction of fiscal consolidation to strengthen the economy. So you can write this example in your answers. So as you can see, assess external factors such as global economic conditions, then the trade dynamics such as the free trade agreements and the trade pacts that the government signs. All these things should be considered as a part of fiscal consolidation. Then the geopolitical risks. So these points you can write. Then the next point is the expenditure rationalization. So the government should motivate the citizens and also should direct its budget and the expenditure in order to rationalize it. So you can write the example of Give It campaign. So Give It campaign was a scheme by the government that appealed to well-off citizens to voluntarily surrender their subsidies to give back LPG connections to poor households. So what the government is doing, they're motivating or they are convincing the privileged people to give away their subsidies, to give back their LPG connections, so that the schemes can be rationalized, and the expenditure can be reduced. So that's how the government can adopt different strategies in order to do the expenditure rationalization for managing the fiscal deficit, and by promoting the path of fiscal consolidation. So you can read it here that in order to enhance the fiscal efficiency, by streamlining the fiscal expenditures, all these keywords, you can read it. I've explained these points and you can write it in your answers. And the next thing is regarding the conclusion. So I've written a conclusion for you, and you can use it as a reference conclusion in order to design your own version of conclusion. So as per the conclusion, while high fiscal deficits can have a detrimental effects on economy, they can also serve a tool for stimulating economic growth, particularly during time of crisis. So what we are doing, we are addressing the question, since the question was directly asking about the detrimental effects of the fiscal deficit on the economy. So what we are doing, we are addressing that part of the question. So the next point is, what we are doing, we are writing the argument of Lord Keynes. And as per the Lord Keynes, who was an profound economist, and he advocated that the judicious use of fiscal deficit to finance the public investments can accelerate economic expansion and create long-term benefits, provided that the return on this investment does not exceed the cost of borrowing. So what he is explaining, that we have seen in the previous slides, that the fiscal deficit is not always disadvantageous. If a country is able to use the fiscal deficit in order to finance the public investment, then it can use it to run the economy in a sustainable manner and will give high returns in the future. So that's what the Lord Keynes is saying, and you can write this argument in your answer, in the conclusion, in order to substantiate your argument. The next is, moreover, focusing on initiatives such as job creation, employment, and the skill development can contribute to economic growth. So what is this? This is the way forward for our conclusion. So at the end, you can write that, therefore, while fiscal consolidation is essential for managing the fiscal deficit and ensuring fiscal discipline, strategic investment in key sectors can pave the way for higher or the brighter economic future. So it is suggesting for a long-term solution to do strategic investment and ensure the fiscal discipline in the economy. So overall, the message is that your conclusion should be short and it should be positive, that is giving certain form of hope, and it should be solution oriented. So I hope you are getting the idea about how you can design your conclusion. We have addressed the demand of the question, given a way forward and a long-term solution by taking a stand about what is our point regarding this whole discussion. So that is to promote the strategic investment and ensuring fiscal discipline. So I hope this whole session was helpful for you, and that is it for today. And I would encourage you to write your answers in the comment section so that it will be evaluated by our team within 48 hours. And let me also repeat that this whole initiative is free of cost. So that is it for today, and thank you so much. All the best.